Hi, welcome to the third podcast. It is December 12th, 2014 on a Friday evening. So let's get this done and then I'll be free for the weekend. So in this one we're going to look at the six main US indexes. So let's start with the S&P 500. So we saw a pretty interesting decline of 73 points this week to 2002, and frankly, the Friday action was pretty amusing to see, especially with the Dow down over 300 points, the VIX back in the 20s, and the S&P pretty damn close to the primary target of 2000. Now, what's going to happen on Monday, I'll cover that in just a moment, but it would seem that the very best case for the equity bears is either going to be 1980, which, we're only talking about 1% further down, or the ultimate best case would be 1950, which is where the 200-day is. I honestly think that's extremely unlikely, because if you keep in mind that the price action this week, where we've seen bounce after bounce after bounce, and yes, each one has failed, but still, we're getting strong bounces of 1.25 to 1.5% regularly, almost every day. So the bulls are out there, the central banks are out there buying, and this is almost certainly just a minor retrace of the hyper ramp from mid-October. So the bulk of the decline on any basis has occurred. It's now it's a case of, if you're short, it's time to be getting out, and if you're looking to go long, now's the time to be kind of looking to move in. Now, I guess if I didn't know about anything else out there, and if it wasn't December, you'd have to admit that we are rolling over on the bigger weekly cycles and even the giant monthly cycles, which I'll cover. Well, probably not for a few more weeks, I guess. But even the monthly cycles are still ticking lower in terms of underlying momentum. So there's weakness out there. We can see that. We've seen it this week. But, I gotta guess S&P 2000, give or take another 1% down. In the scheme of things, it doesn't make any difference. And then off we go again. Up after the FOMC, S&P 2100s, whether that's year end or January, I don't care. I don't think anyone who's got to be long should care. But 2100s seem a given. So interesting decline for the S&P, but overall it's probably just a retrace. Next up, tech. So Nasdaq lost 2.7%, but it's getting pretty close now to the next key support of 4600. I don't think it can go below there, and even if it does go to 4600 early next week, that's only got to get us to 1980 on the S&P before we go up again. The Dow, when you take it on a points number, it's it's a feral number, 678 points down, kind of getting close to 17,000, which is a very key level. Now, let me get one thing quite clear: if we do break under 17k, then maybe something new is happening. But until then, until the bears can break under 17k and hold it under, this current retrace, even though it's pretty big, is nothing other than a retrace. That's all it is. Because remember, we've come up from 15,855. We're still over 1,400 points above that level. This is just a retrace, almost certainly. Okay, the master index, as I like to call it, actually surprisingly, lost the most. It lost 4.3% and is back down at exactly 10,500. Now, after some thought, really, unless we go below 10,000, which I realize is another almost 5% lower, the equity bears really can't get too excited, because, again, this is almost certainly a retrace. Now, I will admit, this is now currently the most bearish index out there, which is kind of surprising, because normally the weakest index is either the Russell or the Dow. So got to keep an eye on an NYSE composite next week, and like Dow 17K, the bulls need to hold 10K on this one. Next up, Russell. So Russell only lost 2.5%, and that's kind of interesting. I think it was Tuesday when we saw the Russell down 1.25% in the morning, but it closed up like 1.8%, which was an insane bounce. I mean, that was the most crazy day in the Russell that we've seen in quite a while. So overall, an interesting drop on the week, but we're still around 1150, which is only 6% away from breaking a new high. And the ultimate issue for the equity bears is if we can see a new historic high in the Russell and get a monthly close in the 1220s or higher, that is a massive signal for next year. That is something that the bears should be absolutely terrified about. If the bears see 1220 or higher, it's not even about waving a white flag. It's about just running away for another year, maybe a year and a half, and just leaving this madness alone. I keep referring back to the transports in terms of the Russell because the price structure on the Russell is very much like what the transports did in 2012. And if you look at the tranny exploded at the end of 2012 and ramped from roughly 5,000 up to the recent 9,400s or so, just effectively almost doubling within about the best part of 2 years or so. I've often, occasionally noted that are we looking at eventually the R2K at 2K? It wouldn't surprise me. Of course, that's a hyper bullish target. Anyway, finally, transports. So, it lost 3.5%, but 8,800. That's we're talking about a minor retrace again. And as I state in my weekend post, that the October low is still 1,000 points low, which is roughly 13%. How the hell are the bears going to manage another 1,000 points low just to get to the October low? Never mind actually breaking it and holding under. So I think the tranny is just naturally pulling back along with the broader market. So in summary, I just got to think S&P 2100s are coming, probably not by year end because that's still 5% higher, and it's going to be hard to get 5% higher across the next 13 trading days, not least because every day we get closer to year end, trading volume dries up. That does favor the bulls. Low volume, favors the algo bot melt nonsense. But I'm just really starting to believe that once the market starts to really fully appreciate the lower oil prices, not only are we going to go to the S&P 2100s, where there's a massive fib level of 2138, but we're just going to keep pushing. We're going to see 2300 and keep going. As I keep asking a few people on various message boards, it's like, where the hell do you guys draw the line? When do you start waving a white flag? Because I see all sorts of crash targets of everything from 1,700 downward, and it just seems crazy to me. Okay, looking ahead, we've got quite a few things next week, but primarily the week's going to be all about the Fed. Of course, there's no QE to speak of, and interest rates aren't going to be changing. The only issue will be the whole word game nonsense, which I can't stand when you see the idiots on clown TV talking about how many times did they say the word inflation or interest rates, or did they use the word extended. Can't stand that nonsense, but clearly they're probably going to be tinkering with the words, trying to allude to the market that they will be looking to raise rates a little bit next year. I'm still got the hunch that they'll raise rates next March. If the jobs data and GDP comes in okay for January and February, then at the March FOMC, I think that's the first real opportunity that the Fed might raise rates by a quarter point. Of course, a quarter point is microscopic, and it's not going to kill the economy. It's not going to kill the system. The market should be able to cope with 2 or 3% rates, at least for a little bit. So, FOMC will be interesting. Of course, Yellen will be doing a press conference, so market could be pretty choppy on Wednesday, but overall, whether we're at 2000 on Wednesday or 1980 or somehow impossibly at 1950, we're going to go up from there, right? That seems quite clear. The only other thing, of course, is next Friday is OPEX, and so that'll be choppy. And that's really it for this week. I think interesting week. Nice to see some declines. Nice to see some dynamic price action. But overall, this is just the kind of retrace that we've been looking for the last couple of weeks, and I can't see why we're not going to go up once we get the Fed out of the way. And the issue will be, one of the things will be, once we get into the 2100s, you're going to see a lot of crash callers appear. I know a lot of people are looking for 2100s and then a massive, major drop, whether you want to call it a wave 4 or whatever. So I think the crash callers are going to be really surprised when the market just keeps pushing up. You know, it gets to 2130, 2140, 2150, and then before you know it, by March, April, we could be in the 2200s or even 2300s. At which point, well, what are they going to say then? What are the crash callers going to say if by late next spring we're in the 2300s and everything's ticking over, oil's remaining relatively low, whether it's in the 70s or 60s? What are they going to say? I mean, I can't be short this market at the moment. It's impossible. Even with these sporadic down moves. I mean, even including the VIX. The VIX was up a huge amount this week, but it's only at 21. We're nowhere near the October high. And I don't see anyone out there talking about VIX 30s anytime soon. So this, the VIX is about to probably max out around 22, 23. I guess at best it could fill the upper gap zone around 25 if you get to S&P 1950, but that seems highly improbable. So, yeah, interesting week. I think the issue in oil prices is massive. In terms of oil, I am looking for a floor, a multi-week floor in oil around 56, 55. So I would project at least a $10 to $15 bounce in oil. So that would get us back to 65, maybe 70, 75 at the very highest. Under no outlook can I see oil going back to above $90 for, in fact, the rest of next year. Unless there's some kind of bizarre geopolitical event, which that's the sort of event you can't calculate anyway. A couple of stocks that I have on my mind, Alcoa, Intel, Bank of America, but I'll leave that for another day. So thanks to everybody who sent emails or messages this week. It's always good to hear from you. And at some point I will be endeavoring to do videos with charts and stuff, because I know it's a lot better than just audio spiel. So have a good weekend, and I'll be back on Monday, and it should be an interesting week with the Fed. And of course, year's almost over. So I should say good night from London.